Hey guys, we are back. I cannot believe this is already our 5th podcast. We were arguing about if it was 4 or 5, but we've been on a roll and I'm really excited. So today I have a dear friend of mine, Christina Gobe. She's with Trustmark and we have been friends for, I don't even know now.
Well, I definitely know that you were in your 20s.
I know. And I remember the way we met is it was a loan that you did for clients of mine. And you were with Cornerstone then.
I never was with Cornerstone. I had to be with Waterstone.
You were with Waterstone. Okay. And I remember thinking okay, I needed a good lender because I didn't have a solid, I had all these weirdos kind of approach me. And
there's some of them out there.
Yeah. And I was I don't want to work with a lender that's creepy. And I remember doing that deal. The client had already picked you because I think you helped them previously maybe. And I was okay, I want to continue working with this human.
Yeah. I feel like I remember reaching out in the email and saying, hey, you're awesome. I'm awesome. We should do business together. Let's grab coffee. And then you're called me up and said, yeah, let's do it.
Which is funny because 11 years later down the road, lenders call all the time. And I'm no, go away, no. And then I feel so bad because there's no buyers. There haven't been any buyers in 2025. And my business has gotten so listing heavy that it's oh my gosh, we finally, I feel are doing more deals together recently, which is great.
It is good. I'm glad that there are buyers and I'm glad that even if there are few of them, that they're having a little bit more leverage. There was no leverage for the last, I don't know how many years, at least 5.
I know.
Especially since COVID started.
COVID started. And we're not in COVID times anymore.
No.
So, and that kind of obviously I wanted the right person to come on at the right time. And it's almost I've been avoiding this podcast because the lending industry right now, I feel is just probably a tough place to be. It is sort of in our agent world and we know it's getting better. So we're working through it.
Sure.
But I want a little bit of backstory on you. How did you get into lending? How did you get here? How long have you been doing this? You guys have to realize she's done this at a very high level for a long time. So you're super calm about things when they're a little crazy. And I call and I'm yeah! And you're it's just going to get better. Don't worry about it,
Well, that has just come with time, right? So I definitely was the antsy, especially when I was first starting out, because you always want to do a good job. And, when you're a referral-based business person, I 100% get my business from referrals. No one's giving me any leads from my company or I'm not buying them. So, and I do a lot of business in my community, where I live, play, where my kids go to school. And so, you're going to see them, whether it's at school or the grocery store, restaurants.
I know I'm getting to that place with the kids now being in school and I'm doing business with families from school. And I'm okay, I really can't F this up because now I have to see these people multiple times, sometimes multiple times a day, drop off and pick up.
Yep. So I'm hey, these people are people I see regularly, whether it's through sports or whatever. So every single time you got to knock it out of the park. And, that's how my business was made. And that's where our customer service became so important. But I don't even know what we were talking about to start off with.
No. So how long? Okay. So what even got you because to me, being a lender, that sounds like the worst job in the world, honestly. So you tell me, because people don't realize in this industry, you really do create a team, right?
Sure.
Even though you're not you don't have inside people, it's you have your go-tos for everything, your title company, your lender, your this, your that. And it really does, my ops manager, right? Okay, I automatically email Kristen because Alex is doing something else.
Sure.
But it just makes the process that much easier. So what brought you to even
doing financing, lending?
Yeah.
Okay. So no one ever says that they want to be a mortgage lender.
Right. You don't hear, I'm going to be a mortgage lender when I grow up.
Usually what happens is that somebody in your family or a family friend or somebody says, hey, I need some help at some point. And then you get into it and then you kind of never leave. Unless I do know people that were in the business during the mortgage meltdown. And a lot of people left the industry when
2008.
Yes. Like when the subprime, stuff was blowing up, and those people never got back into mortgage, but everyone since then has pretty much stayed. I'm at my 20th year. I know it's hard to believe.
20 years.
Yeah. I started pretty soon after college, but basically when I was in college, I would go stay with my aunt, who I really looked up to and thought, she was like my version of Madonna. Like when you're little, you're like, who do you want to be when you grow up? I was like, Madonna or my aunt, because they both seemed, very cool and sophisticated and smart and in charge and like independent women. And she was in mortgage. And so I would go in the summers and she lived in a cool city, not where I lived. And I thought it would be really fun to go out there, and I would intern. And that may be making copies or cleaning files out. I mean, mainly you did a lot of copy packages and data entry. I didn't know what I was doing. Like I didn't know what it actually was and what its importance was. I was very administrative. But
I feel like a lot of people don't know really what the importance of a mortgage lender is until they actually get into they actually need a loan, right?
Yeah.
And then they realize.
Well, and I was like 16, and I did it again like when I was 19, would go work during the summer. And then I decided it was not cool enough or sexy enough. I wanted to be in something like really cool. I think I'd been watching too much Sex and the City or something. And so then I got into advertising, but I realized I was really just doing print mailers that got thrown in the trash.
Okay.
And so then I was like, I want to actually do mortgages again. And because I had those internships, I was able to get interviews, and I started as a loan processor. So that's like an operations job. It's really behind the scenes. It's not glamorous in any way, shape, or form. Not that mortgage really is, but you know what I mean? But that's how I learned all the foundational skills of being a good loan officer.
Mm-hmm. And you've been doing it for so long. So like right now, your new job title, you are like VP of
yes,
lending, right? So what does that even look like? Because you're still doing your own files.
Well, so I think a lot of people at banks are vice presidents.
Yeah, that's why I'm asking. I don't even understand. Like, again, I do this all the time, but I always see VP of something. And I'm like, there's a lot of vice presidents out there at banks.
Yeah, I think that would just be the equivalent of being a senior loan officer. So
okay.
Like if you do a certain amount of business, in no way do I manage anyone besides my loan files.
Okay.
But
you used to. You used to have a team under you.
Yes, I did.
Okay. And so I was in a meeting this morning talking to some other big time agents about the the pros and cons of having a team, right?
Yeah.
Like, and everything that comes with it. What's your take on that from the lending side?
So I loved having a team, and I was doing a lot of sales training and building out a team, and was doing business and a ton of marketing at that time. And it made sense because like my job really was to get the deals and walk away from the I mean, obviously you're checking in and whatever, but you have a team that's completely doing the operations and support. I'm a bit of a control freak, so that was a little bit challenging for me. And I hate saying this, but now I know myself at this point. Like I am not a big like rah person.
Yeah. Yeah.
I mean, sometimes when people need a lot of encouragement, like that's not necessarily going to be me for doing your job.
I learned that this year very quickly. Like I'm not good at managing a team. Like I'm like, what? Just you're supposed to do it. Like I
mean, I don't think that I was like ever harsh, and I think I always was compassionate, but I also am not like a attaboy, I don't like to make long emails. I don't like a lot of feelings being involved in things. I'm just very like direct. Let's get this done. We got to check this box. I like to get things done quickly. So that just wasn't, I just realized during COVID, and like I was doing a ton of business during that time because you're doing refis and purchases, but everything was remote.
Mm-hmm.
I didn't have a team any longer in the same capacity. And then, also with some company changes, some of them don't really support the team models, but they had the programs and the products and they had the operations that made sense for me to not have that same team. And so I just haven't really needed the team build out like I did in the past.
So do you feel like that's actually like really good to think about? So do you feel like a lot of other lenders feel that way, that since COVID, your world has changed in the way that you guys just run your businesses and manage things?
I think COVID 100% changed every aspect of my life and my world and me as a professional. It made me evaluate things a lot differently.
In what capacity?
A work-life balance.
Okay.
I probably could have worked, 80 hours a week and missed a ton of my kids' stuff. And I would have been like, well, that's just, I have these goals and I need to do these things. And I was so focused on that path. And now I have more of a balance of, I want to work, but I don't need to break every record. I don't need to be the biggest and the best. I don't have as much time as I thought I had with my kids because it's happening so quickly. And so right now I'm really trying to be present there, but also be working. And that's one of the best things about my job is that I have the flexibility to do that because I can work from home. I'm always on call. You know that.
Yeah.
But I can still make it to carpools and I can make it to games and I can, it works for me right now. I don't know what that will look like. And, when I have less kids at my house, I'll probably have to find things to do with my time and maybe I'll be out and about again. But I can't go to like marketing things like I used to. I can't go to like happy hours. Like my nights don't belong to me anymore.
No, I'm so glad you're saying that because this is a trend that I ask people on this podcast because it turns into a more in-depth conversation of like what is most important to you, right? And I think that's been the trend that I've kind of been getting out of everybody that I've interviewed is time, right?
Yeah.
Like, cause I have been very upfront with being honest about like this year, I'm going to have my best year. I've said this time and time again, but it's felt like a complete disaster, right? Because I feel like we're working so much harder to get to the finish line, but I'm working more hours. I'm working all hours of the day. And I got really sick earlier this year. And I'm like, what am I doing this for? Like, just like you said, like, why does it always have to be the biggest and the best? Like, why can't we just be right in the middle? And I don't know how to do that. Like, that's one thing I'm bad at. Like, I'm a very all or nothing person. So
Sure.
I think in hearing from people like you who have been in the industry a lot longer, your kids are a little bit older, it has been a reoccurring theme for 2025 of realizing like, even if things have been slower or harder, that's the universe's way of telling you like maybe you should slow it down and readjust how you do things because now is the time to take that time to really recalculate how we're going to do things.
I mean, I love being busy with work and
so do I.
I wish that it was busier. I wish I could fill a whole, 9 to 5 with putting up deals but honestly, like I don't have enough buyers and obviously things run so well that I don't need to be touching every single thing and getting into the weeds of it all.
Right. You also you said something too. It's like, okay, we're not doing, once you're in the industry, I feel like a long enough time, we kind of just expect that we're going to get those repeat clients. And I think a lot of us, like I just had a meeting with my mentors before this. We're just in the place where we're like, it's going to come when it's going to come. And we're not in a space where we're even wanting to try to like go out there and market ourselves as this or that, or, push to do that, because it's kind of this balance, like you said, of, okay, we want the business, we want it to be busier, but we also are enjoying our lives a little bit too. Yeah. It's like, we're getting this little like piece of it, like my mom's in town right now and I never am not on the phone on a Sunday, but lately I've just been like whatever, dude, it can wait till the next day, right? Because I'm not in this constant like, okay, there's another deal, there's another deal, there's another deal. Like it's giving me a minute to breathe and I'm realizing like, oh, I kind of like this. So it almost scares me to think like, okay, what is going to happen next year when we're like back on the craziness again? Because they're, all the predictions are saying whatever, we get a new Fed chair and spring of 2026 is supposed to be super busy. And it's like, well, do you even want that anymore? And I don't know.
I mean, I think I would like a little more because I find that right now when there is dead time, I get involved in things that make me crazy. Like volunteering for
At least you're being productive though with your time.
Oh, I am being productive, but some of them are just like, there's just a lot to take on. And I don't know. And I know you have this problem too. You're a yes person.
Yeah, to 100%.
And so when you do that and you constantly say yes, and sometimes you don't really think about how
you're
much time,
yes too.
Yeah.
Mm-hmm.
And how much time, or sometimes people say, hey, can you help me with this? And then they go MIA and you end up being like, that's been hard. So that's something that I have filled my time with, a lot of, yes things that don't necessarily give me sanity.
But if you're volunteering and doing these things too, it also could lead, I hate to say this, but every extracurricular I do always is like, my brain's always like, oh, it could lead to more business, right? Because that's just a natural, like, oh, I'm sitting at cheer. I might as well make friends with these moms because I don't know. And it just naturally comes into the conversation.
That's true. It definitely does. But I also, again, I think that there's this headspace where I'm at where maybe I'm thinking more about just being present with like at my kids' schools or figuring out what's going on. Or, I mean, my daughter just started high school and, you're like, it's all a set of new parents and you're like, who are these people and who are their kids?
And who are they hanging out with?
And who are they hanging out with? Yeah.
I got you.
And I had heard this from people who were older and wiser that, you think you're busy now, wait till your kids get older. And it has been insane. So I know you're very busy.
No, but I get it. Like, yeah, me as in cheer, gymnastics, dance, and acting. But
sounds like a lot.
Sounds like a psycho. And she's 5, but she has that personality.
Uh-huh.
So they're probably in more active, and now Millie's in dance, tumbling, and gymnastics. So they're probably in more than most 5 and 3-year-olds. But once again, I just like packing it all in, which leads me to the question I keep asking everyone on this podcast is, how are you managing all your time in this crazy industry? Because it's hard.
Well, so what you're saying though is you're signing them up and you're managing them.
Yes, it's my fault.
I think once they get to middle school, and this could be me being a parent, but I feel like this is across the board. They start managing their own things and giving you surprises constantly. Like, oh, well, we've made plans to do this, or can you take us here? Mm-hmm. And you never feel more like you're in a community than when you have to, like that's survival. I mean, literally it is survival to get them to and from different activities, games, practices. You really rely on people. So.
But your way of handling that with your business has been not taking a step aside, but just, again, making the kids more of the priority and knowing that you have some boundaries on.
Oh, work. I mean, I'm working every single day.
Okay.
So it's not I think that it consumed so much of my time pre-COVID that it was like everything I was working towards, I had the mindset like, oh, well, it's so that I can provide for my family. But there wasn't as much time. There wasn't as much, I was wiped out by the end of the day. Whereas now I think that, I prioritize working out. I prioritize making sure I can go to my kids, things, whether that's a game or a practice or open house or, just whatever that comes up, special event. And then, I'm obviously working too. Like I handed off a file yesterday. I updated pre-approval letters.
Yeah,
I also cook dinner
for me right now.
Yeah.
Exactly. But I think what I'm hearing, and again, this is consistent, it takes people at least 10 to 15 years to figure that out. Like figure out, okay, I've grinded in my business in this real estate industry, especially because like all of us, whether people don't understand, if you're a loan officer, an agent, title rep, like you have to go get the business. It doesn't just get handed to you. But there comes a point where you can kind of take a step back, but it takes a while. Like I'm just waiting for that time of like, it was
probably 15 years.
Yeah. That's what it sounds like.
Yeah. 15 years.
Okay. So let me ask you this question. In the last just 3 years alone, what has drastically changed in the mortgage industry that like you see as the biggest change, whether that's a positive, negative, something that you've really noticed has like affected your industry?
Well, I mean, obviously interest rates are high, right?
Yeah.
And so
let's talk about that.
They're high. I mean, especially where they've been.
So what's the average rate that you're seeing right now on a 30-year fixed?
I mean, I would say probably low to mid sixes on a 30-year fixed.
So like to give you guys an idea, when Christina did my loan for my house, I think we're at like a 2.9% interest rate. Yeah.
That sounds about right. And you have a ton of people who are never going to move because they're in high 2, low 3% interest rates.
Right.
I mean, I don't want to move and give that up and have a 6% interest rate. So there's a lot of people that are locked into their property. So that's a lot less properties that are going to come on market. That's a lot less buyers that are going to be willing to buy. And if I sell my house, it'd probably be, to downsize when my kids are gone, and I would probably pay cash because I've been owning this house for so long and, bought it when there wasn't as much inflation. I mean, home values have gone up because interest rates were so low.
Right. And they're not continuing to go down though. So like, I guess my question with that or like what we hear as agents that we're struggling with is, okay, the group, and this is like a lot of the people I think you and I work with just because of our age, they're trying to jump from like this, mid-range, I say mid-range, but like I always am working with families who for the most part have done well for themselves over the years. So they're looking every 3 to 5 years to kind of jump to the next level of house. Well, when you get in this bottleneck of these higher rates, my argument to them is, and you might totally disagree or tell me something different, but I'm like, okay, I get the rates are higher, but prices of homes are continuously going up. Yeah. So if you want to jump from $1 million property to a $3 million property, now is the time to try to negotiate that, because the second that rates go back down, we're going to be in the same loophole again, not as crazy as COVID times, but where more buyers are going to come out. Mm-hmm. There's going to be multiple offer situations, and then you're just going to have to go up on price anyway. So is it better to just try to play the game, because it is a buyer's market technically right now, and try to negotiate and then refi later? Like what's your take on that?
I mean, I think when you're waiting for the perfect timing, you typically will lose out, right? Mm-hmm. So, I mean, what is it? Date the rate, marry the house. I think that if you can afford it and you're ready to move, then you should take advantage of that, especially if it's favorable terms in terms of actually getting a home. Because I've been on both sides of it, right? Where I've had buyers. Well, I always have buyers, right? But then there's no houses. They've put in offers on 5, 6, 7 houses. And
that was awful.
They're getting beaten out by all cash, or people who are saying they're doing all cash.
Or waiving appraisals.
Waiving appraisals. They don't care what it appraises. Or they're having people that are going 100, 200, 300 over. And that sounds insane, but there are certain areas in Houston that do fetch over 6 figures.
Yeah, I mean, I have
listing prices
for almost a $5 million house under contract cash. And my client recently, I mean, he tried negotiating a couple $100,000 off because windows, right? Like just the value of the windows over 20 years had disappeared and gone away. I mean, I had Pella Windows come in and they gave us almost a $500,000 quote just to get the windows done, right?
Wow.
The AC, there's 5 AC units in a 9,000 square foot house. So 2 of them are out. Like that's $50,000 just to get AC units fixed, right? But the seller was like, sorry, we priced this property so competitively. We know what street we're on. We know the lot size. We have 3 other offers waiting in the wings. Too bad, so sad. Like we don't care, right? Yeah. And so they don't care that we're cash. They have somebody else who, getting a loan, whatever, that is
willing to pay.
Yes. So I'm still seeing that though.
Yeah.
If properties are priced right.
Yeah. I mean, there's definitely, I can say that I have several people right now who put in offers and didn't get them on properties. And it's usually the same areas of town that have you're going to have to go in and be very cutthroat and aggressive, even in a buyer's market, because it just doesn't really exist in the certain neighborhoods and areas of town. But, I think that if you can buy something, they are projecting that rates are going to go down. I don't think we're going to see 3s again unless something really horrible happens. And I don't necessarily think that's been a good thing. Right?
I agree with you. Do you think that with what they're meeting again on the 29th this week, right? Do you think that rates are going to drop again? Like what are you hearing?
I mean, there was statistically, it was in the 70 percentile that economists were forecasting that they were going to be cut. And then I think it's in the 60s that it'll have another cut in December.
Okay. Because we basically needed 2 more, right?
Yeah.
They had said 3 for 2025 and only 1 has happened, right?
Yes.
Okay. So I guess in our world, that's
maybe 2. I don't know exactly.
I think it's been just 1, but
probably 1. I think 1.
So when your bank does projections, like because this, again, I know no one has a crystal ball, but I work so heavily right now with sellers, and it's like I had a seller, somebody terminated this past week, and they were like, well, do you think that this next meeting with a rate drop is going to help our cause in selling? And I'm like, I don't know, a 0.1% drop. You wouldn't think most buyers would understand that that's not going to change their monthly mortgage payments really at all. But the last drop we had, it was small, but like all of a sudden, it was a quarter, but all of a sudden that pushed the needle for a lot of people.
So banks already forecast those cuts into their rates. So that's something that the consumers don't understand.
Yeah, explain that.
Yeah. So basically, when that last cut happened, every single mortgage lender, every single mortgage rate was already factoring a quarter rate cut. Now, what would have been really surprising is if it had been 0.5 point.
Okay.
And then you would have seen a bigger drop. But there was no drops at that point because it had already been baked into the rate sheets for several weeks.
Okay.
So that's kind of the same thing where we're at right now. They've baked these cuts in. So when people go, oh my gosh, did rates get better? No, they didn't get better because they already got better 2 weeks ago.
They were projected to happen.
Yeah, exactly.
Okay.
So.
Okay. That makes sense. I mean.
But if it's a bigger cut than what's being projected, which they're all a quarter. So if it was bigger than that, then you'll see it.
Do you think that's a possibility?
Probably not.
No, not for this year.
No.
Do you think all the projections I'm hearing from I used to do Brian Buffini's coaching, right? And Buffini, they say, is he's always spot on with his predictions. Don't know if that's true or not, but he's saying spring of 2026 is going to be this miraculous, huge uptick and rates are going to drop. Where is he even getting that? Where is that information, you think, being stirred from? Have you heard that? Is that something
I feel like we hear a lot of things there's going to be 7 rate cuts and, right. And there hasn't been. And we also heard, I think that this is a really strange environment because you have 2 competing things that I don't think historically have ever really happened before, where you have, the unemployment rate seems to be going up a little bit. We have potentially inflation. We have a stock market that continues to just keep going up. And you don't really have potential price increases and tariffs, and then also have a stock market that's doing well, and then cut rates. So I think that there's this is just weird territory to be in. I don't think anyone really knows what's going to happen. And I don't know if everyone really knows if it even makes sense or what information's real. Plus with the government shutdown, there's going to be reports that we're not going to get.
Right. Okay. Yeah. That leads me to my next question. I was really trying to avoid some of this, but okay. Well, first let me work back. So you were in the business in 2008 when it was like a massive crash. Comparing 2000,
I got in it in 2005.
Okay. So you were before, during, compared to then versus now. Like, what would you say the differences are, and what would you say it was better or worse? Because someone told me today they feel like 2025 is worse than what happened in 2008.
Okay, well, so remember, I was very newly in the business, and you
didn't know any better.
I didn't know. And I also was a processor, so I wasn't originating loans. But the biggest difference, I think, was those mortgages that were done were essentially, they were called Alt-A loans, which alternative lending.
Yep.
They were subprime loans. They all had ARMs. They had prepayment penalties. They had higher closing costs. You were doing investment properties with 100% financing. Debt to income ratios were 65%. Like, you really, really had to be a mess to not get a loan back then. And still, they probably would have given you a loan with a 9% interest rate, 10%, whatever. Now, anybody that's getting a mortgage is qualified for a mortgage. Like, they truly did tighten up on the guidelines. So if there are foreclosures, it's going to be because people lost their jobs. It's going to be because expenses have gotten too high. It's not because they were given bad loans.
Gotcha. And do you see, have you seen the foreclosure rate go up? I don't think we're quite there yet, but
I heard something about it, and I'm wondering if it's more because so many people bought investment properties for Airbnbs during COVID. Like, I've heard Galveston has an insane amount of inventory. I don't know if they're primary residents or people are defaulting on second homes and investment properties, but I've heard that. I haven't seen it come across my desk where somebody is buying a foreclosure property, which back then, I mean, people would buy foreclosure properties.
And that was common.
Yeah. I mean,
are you seeing a lot of people start to default on their loan payments?
No.
Okay. Because again, I was with someone today where they own a ton of rental properties, and that's a, mailbox money for them and a passive way of making income. And they're like, oh no, we just looked at the numbers. Over 65% of our tenants have not paid rent for just the last month of collecting.
Well, but that could go more to, these are people who own investment properties who have tenants who maybe are being more impacted because they live paycheck to paycheck. And if things are going up, goods are going up, then maybe that's why they can't pay rent. I don't know.
Okay. That makes sense. What's one big thing in 2025 that you're seeing make or break people getting approved for a loan right now?
Well, insurance has gone through the roof in a lot of areas that have potential impacts to be flooded or have storms. So we've seen, like, I used to be able to very easily predict what someone's homeowner's insurance, because we don't provide their insurance. However, I would put it in as a placeholder for qualifying, and then they would go and shop for their own insurance.
Right.
And I mean, you can see premiums, like, I'll say a number. I mean, I could get an estimate. I could say, oh, I think it's going to be like $6,000. And they can get an estimate for $5,000 and another one for $13,000.
Because it's all over the place right now.
It's all over the place. So that's something that I think I tell people to start shopping for insurance during the option period.
No, that's smart. So my question to that then, because we always hear as agents, we get like little pieces of that, right? So like as agents, what should we be looking out for when we're showing buyers' properties, right? Because like roofs, for example, has become a huge thing. And I have noticed now insurance companies in Houston or for insuring in Houston are like, nah, if it's over 8 years old, that seems to be like the cutoff. At first it was 10. Now I'm seeing it like, no, if it's over 8 years old, most of these companies are like, you need a new roof. Like it needs to be negotiated at this point up front. Like what other stuff should we be looking out for?
A roof. I mean, big things, even like tree limbs that are like over the house and not even necessarily touching the roof, but they want all that cut down. I think they pretty much want to reject and cancel a policy for almost anything.
Anything that can flood, have trees fall on it. So like, okay.
If you ever were going to have a claim, they'll reject you.
Okay. Well, yeah. I mean, it's a joke at this point because we've had so many claims because we live in freaking Garden Oaks where it's trees everywhere. And like our house, I mean, we've had 2 trees, like one come down on our garage, roof. And
yeah, last year there was 2 big storms that were like 3 months apart that pretty much just ripped through that area and took down a ton of very old oak trees.
Okay. So do you think then, for example, like we should start, because now I've just started negotiating up front. Like if I get the seller's disclosure and it says a roof is 20 years old, I'm automatically like in the offer, like seller to replace roof with, certified shingles, blah, blah, blah. Should we be doing the same for trees too? If we see that they're too close, like automatically, like
that'd probably be smart to say that they need to be
cut it
trimmed.
Down. Yeah. Like, or automatically like cut off this because I already know we're not going to get insurance for our buyer. I'm just trying to like in every industry that I'm starting to interview, I'm trying to ask like, because as agents and you guys as lenders, we're working so hard to get deals right now to the closing table where now I'm just in this mindset of like work smarter, not harder again. Right.
Sure.
Like, so
be proactive, not reactive.
Yeah. Just trying to be proactive with this stuff. And insurance has been a nightmare. Like it's been one of these things that's just created so many more negotiation issues, or it's like, I can immediately tell the listing agent like, hey, FYI, even if my client's not buying this, you might want to prepare your seller that they're going to have to put a new roof on. Like even going to listing appointments, we should be open to telling them that.
I mean, you should be looking at the roof because I feel like that's the thing that is the most noticeable. And I mean, all these insurance companies want to do inspections and I don't know, I guess they have aerial footage of everything and they will look and just see if there's trees and say, oh, these have to be cut down. And I mean, there'll be other people that might insure you, but the most common things are trees and roofs and, you can't have knob and tube in your house.
Right. So that leads me to my next question. Flood insurance right now?
It's on pause. You have to get private flood insurance.
Okay. So please explain this because this is so important right now for people to understand. Like when the government shut down, I had a freak out attack because I was like, what of my houses that are under contract are in flood zones?
Yeah.
Thank goodness not one that I had pending was in a flood zone.
Sure.
So, explain to the public, because again, most agents don't pay attention to these things. Most consumers don't pay. Like, what's happening with flood insurance right now?
So, flood insurance, like the national government program, I think it's NFIP or something, National Flood Insurance Program, they are on pause. They cannot issue any new policies while there is the government shutdown. There's a lot of other things that have been impacted by the government shutdown, but I could say that as an industry, we can work around a lot of it.
Okay.
Like validations, tax, we can get some of those things.
Okay.
But flood insurance is a hard stop. So your only workaround at this point is to get private flood insurance, which there's companies that definitely offer private flood insurance. Mm-hmm. I just don't know the price difference.
Okay, so is that the biggest difference?
Yeah.
Like private versus going through?
Sometimes private is going to be less expensive.
Okay.
Because I think that there's more of a weighted premium now with National Flood Insurance.
Okay.
But it can be more expensive to have private. I know we have a property that has flood insurance and we had to go through the National Flood Program because the private was very expensive. And also we were denied because they can deny you because the property had flooded before.
Okay. I was going to ask you that question as well. Are you seeing,
Which the National Flood Program cannot deny you flood insurance.
They can't deny you flood insurance. That was going to be my question.
If it flooded before, you might have a higher premium, but they don't have to say, well, no, we're not going to cover this at all.
Mm-hmm. Yeah. Do you feel like that national program is just going to go away altogether at some point?
Let's hope not.
Okay.
Because that would be a very big problem. That would be detrimental to real estate.
Okay. I'm concerned about that. I also, leading into my next question, I don't do a lot of VA or FHA loans, but what's happening with those right now with the government shutdown?
So you can still get case numbers.
Okay. What does that explain what that means?
So when you're doing a VA or FHA loan, you're assigned a case number on that loan, which basically means that you have insurance, with FHA, or you have your guarantee through VA.
Okay.
And that case number basically locks in that transaction with those entities. And you can still get them. We can still close. I have heard that there's really, not something that a consumer would really feel impacted by.
Okay. So it's not like the people, because
you're behind
still
the
handling
scenes.
The file.
Yes, we're still handling behind the scenes, making the sausage might be a little more complicated, but the consumer doesn't necessarily see how the sausage is made.
Could that be impacted though if this goes
Sure.
longer? Because who's managing all of that behind? No one's right. No one's managing that behind the scenes. So has that been something you guys as banks have been told hey, if this goes past 6 months or whatever?
Well, if it did go further than that, then I think there would have to be some serious changes, because we can make pauses on, certain timing of validations or what we get. But if it was, more, I don't know what the longest one has been. Has it been a month?
I think it was 2018 or 19. And I read it was 35 days, 36 days, something like that.
What are we at right now?
I have no idea what we're at right now. We're not quite there yet. I don't think it's been a month yet.
Okay. So hopefully it doesn't go much longer, but if we did go further than I think 2 to 3 months, then I think that it would definitely kind of change how we were doing business.
Okay. Good to know.
Banks, insurance companies, all of the above would be, kind of impacted on how we do business.
Okay. Next question. Appraisals. So I don't know if this is even true or not, but you always hear this rumor, agents getting frustrated, and you hear, okay, when rates are higher, banks are getting tighter on who they're actually going to approve loans for. We always hear these rumors of, appraisers, back end behind the scenes are getting tougher on appraisals because they are being told they want to make sure that the bank is actually obviously going to get paid back for this loan, and is the property actually valued at what we're saying it is. Is that true? What's your take on that? Because I have had a lot of shitty appraisals this year, and I'm what is the deal with this?
Well, that's also more likely to happen when you work with a lot of investors, because they might be going into areas that are, the market's changing and they're maybe first movers in the market.
I've had some though where these are normal resale deals, we're priced right, and these buyers' appraisals have come in low, and I'm there's no way. We have comps for we're just fighting appraisers left and right on this.
Well, what I would say is we've been hearing this for a while. So all appraisals, whether it's a private bank deal, meaning a jumbo mortgage that's not going, through Fannie and Freddie or FHA or VA. We've been told for years now that there's a back-end system that is essentially getting more and more automated that is checking the work of these appraisals. And I do know that there'll be gradings of how an appraisal will be graded. And if it's graded over a certain level, then you basically have to audit it further and have comments. And so these appraisers are basically now a little bit scared to kind of go out a little further maybe, or maybe it's a really unique property, but they're having to conform it a little bit more because of the automation of all the data behind the scenes that's now saying, oh, red flag on this appraisal.
That's really interesting. Is AI doing that? Like, how is that working? Do you know?
I mean, I don't know if it's AI, but I know it's data that they have collected and basically analyzed these properties. Like they basically analyze an appraisal report, the address, and then they take comparables and other reports that went through that whole other system because it all gets uploaded in a system. And
so technically the agent isn't supposed to be like fighting and running their own comps anymore. And
no, they always should.
Passing those through. Okay.
They always should put together and do their due diligence for their clients of what, how they came to that pricing. If an appraiser wants to use them, great. If he doesn't, and that's up to them.
Can I ask a question on that though? Cause like my ops manager is amazing, and she was trained by someone and I was trained by someone who was always like, you show up at the house if you're the listing agent and you hand that appraiser your comps and you explain all the things to them. I do that, right? Like I'm like, even on ones that I think, oh, there's no way, because I've had ones that I think there's no way, and they do come in low. Do you think that actually helps? Do you like what do you think? Do you think these appraisers actually pay attention? Because I'm going to be I feel like appraisers are cocky, and most of them don't like when you try to negate the situation. But I mean, I've had appraisals come in low, and like the number of beds and baths is wrong, and I'm like, how could you tell me that this is right when I'm just telling you basic information on these is wrong? And then they've still come back and said, oh, sorry, we're not going to raise the value. Like that drives me crazy.
Well, so, I mean, appraisers are human and they do make mistakes. I've sometimes seen like square footage is wrong. Sometimes I've seen reports that they've copy and pasted because there's like a formatting and then they didn't update all the information.
Yep.
But I do think, if you're the listing agent and your job is to represent the seller and the seller's job is to at least perform to the listing price, not necessarily the agreed price, right? Because if somebody goes over asking,
right, that's on them.
Yeah. So if that means that you go in and do your due diligence and put together a packet, you did what you were supposed to do. If the appraiser accepts it, I don't know. We can't have any dialogue with appraisers.
I know.
So I think when you take out some of those checks or who they have to be accountable to, because now they don't really have to be accountable to us, but there is something that is missing when you can't have dialogue, right? Like
it's very frustrating because I still feel like there's this like gap between you, like the lender, the agent, the appraiser, and the appraiser is still always going to win, like because their report trumps everything.
Well, and if you have a VA or FHA loan, that appraisal sticks to the property for 6 months.
Right. Right. So has there been any talk within the industry of somehow like managing the appraisal process better? Because I know you're talking about all this data being entered and it being regulated a little bit more. But like, again, it infuriates me time and time again that these appraisers, like you have Joe Schmo from Conroe that comes down and appraises a property in the historic Heights. And I'm like, you don't even understand. They're not even giving things value of, we know, historic with windows have to be super expensive. And, and I'm like, you can't put a tallied number on that, but those things make a difference. So like, is there any sort of talk of regulating the system a little bit better?
Well, I don't know if you'll like this, but it sounds like the regulation of it is going to be more kind of like
mainstream
data collecting and automation.
So what are we supposed to tell our sellers who show me $500,000 of upgrades that I agree with them? I'm like, okay, these are phenomenal things that should be given value.
Well, I guess you have to say, what are the upgrades?
Sure, which we create like sales lists, you know.
I know, but there's some things that like the appraisers are not going to give value for.
Okay, so tell me what are some of those things?
Obviously, if you upgraded your kitchen or bathroom or, you know, did things that are really noticeable. And
so they're looking for like remodel, like they'll count remodels.
So I have always been told, and I know these things are expensive. I mean, a generator would give you value.
Okay.
A pool would give you value.
But not as much. Like people think a pool is going to give you like $50K in value. And I'm like, maybe 20, 25. Is that?
Yeah, no, you're
right?
not getting anywhere close to how much it costs to put in a pool.
Right. Okay.
But, you know, sometimes you see stuff where people are like, oh, we replaced the windows. Well, we know windows are very expensive, but an appraiser may not give you value for that because it's considered maintenance. AC units, new roof, upgrading plumbing, going to a tankless water heater. You know, there are things that like definitely as a buyer you would want and see that this is beneficial to have. But
what about material selections, right? Because if an appraiser doesn't understand, okay, there's been a remodel, but somebody used like level 1 quartz, and then you go into another house and they have, you know, the same CMs of marble, like, but if an appraiser's dumb and doesn't understand the cost difference, like, can they give any type of value to that?
Well, I think that they should know the difference between construction grades. That's why you'll see like a grade 1, grade 2, grade 3, grade 4, but they may not completely know. And it's not going to be dollar for dollar. I mean, even if you did a kitchen remodel, you're not going to get dollar for dollar for it, even though it has the greatest rate of return. So I think you list it all out. I think you definitely say why it would be better. And look, any lender is going, I mean, even now there's a standard form where you can rebuttal the value of your property. Even if it makes value, we have to now send out a disclosure saying you have the right to rebuttal this value.
Okay, but I rebuttal, like there were years that I would give my little spiel and I would win. Like they would come back and be like, okay, we're going to come up.
I think I was on some of this.
Yeah, I think you've been on some. And I get real like, and I'm like, okay, here's all the things. I send pictures, whatever. This year I haven't won one. Like it's literally in like, again, homes that like, in neighborhoods that we've run our comps. Like I know my numbers and I'm still just like, how is this possible? So like, what's the likelihood? Like what's the percentage that you see that those rebuttals actually win?
You know, honestly, I think that that's probably 60 to 75%, but I also am going to say I have not,
high.
It does sound high, but okay. I also am going to say that I haven't had many that I don't think I can think of one that hasn't hit value this year.
Okay. That's fair.
Now, if I had more of them, I probably could have a fresher number, but I think who we have on our appraisal roster, which like we have an internally managed appraisal desk, they've been all great and they know their areas and I haven't had any issues.
Okay. Let me ask you this question. I swear I'm not a pain in the ass, but do you guys have like, when is the red flag raised on you? So like explain, like you guys have a roster of appraisers that you just have to submit the file and then one company picks it up, right? How many times does it in a certain company, an appraisal company, have to come in low for a bank to be like, something doesn't seem right with like this specific company or this specific appraiser?
Gosh, I never.
Because I've gotten like the same appraiser multiple times and there was someone who I'm like, like this one it would every time.
Well, now I do know that there are certain appraisers that I think are tougher than others.
Okay.
Not at where I currently work, but in the past, it'd be like, oh, this guy's always, comes in low.
So has that been something, because I mean, you've worked for a couple of different companies.
Yeah.
Has that been something in your decision factor? Like,
no, because I don't have control over who's on the appraisal.
You can't see that list.
I can ask like, oh, do you have these particular companies on your list? And if you had issues with appraisers over and over again, you may say, hey, can you look at them and see what their history is? Because maybe they're overly critical of properties, but we really try to stay out of it. because it's supposed to be, I mean, it's an independent third party, you
Right.
know, that's supposed to be verifying those things for you and protecting the bank. And anything that I think protects the bank ultimately ends up protecting the client too from making risky or unnecessary decisions.
No, I think you're right. I just say I just have appraisals just always, it's like either a great experience or a really bad hiccup in the buying process.
Okay. So I'll ask you a question if that's okay.
Yeah, you can ask me.
Okay. So on these deals where you haven't won, when you've rebuttaled or you've put together, like, what did the sellers do in those situations, or the buyers? Like, has that changed? Because historically, there's a few different ways to solve those, right? Like, the seller can come down on the price. The buyer can bring in the difference. Maybe they can meet in the middle.
Yeah. Usually we get both sides to meet in the middle. Like, but this year, nobody wants to budge. So I've been lucky enough to at least have sellers that are reasonable and they've wanted to make the deal work.
Yeah.
So a lot of times, and I've been lucky that it hasn't been too far off. Like, max has been like, well, that sounds like a lot, but like 12,000 off, where it's like, okay, let's try to get somewhere. And 9 times out of 10 this year, the seller has had to come down in price to make it work.
I don't think 12 is crazy. We've seen crazier numbers.
Yeah.
And that's the one thing, is that I think it's all about delivery, right? And I think it's also, appraisals sometimes come in low, but I have found very rarely do they blow up a deal.
Okay, that's good to know.
In my experience, they come to some sort of negotiation and everything moves on.
Even this year, where I've seen people just not getting along and saying, no, screw you.
Like I told you, I haven't had an appraisal issue this year.
You've had no issues. So knock on wood. Actually, knock on wood. We have a couple of things going. So we haven't got to appraisal. So let's pray on that. Okay. Out of 2025, since we're wrapping up, what is like the most difficult aspect that you're seeing people getting rejected for loans? Like, anything out of the norm, anything weird? Like, I've heard from someone else, they're like, okay, people's debt to income ratio right now is like through the roof. Like,
yeah, I would say, so we do one-time close construction deals, and I also do loans that a lot of people who are maybe upsizing, or upgrading a property would take advantage of, because they're a good loan program for move-up buyers. And a lot of them might have debt to income ratio issues because they have a departing residence that is not going to sell prior to buying a new house. And essentially they're in a situation where they have a contingency situation, or if they don't have a contingency off situation and they can qualify for both, they may not have the cash because it's all tied into their house that they're selling.
I've seen more,
but after closing
this year than I ever have. Like, I've done a lot of contingencies this year.
But, like, if you think about it, that used to be the norm. Like, when I first got in the industry, like, everybody had contingency offers.
I know, but the problem is when the other side isn't selling, right? Like, I just had a deal bust because, again, like, somebody went under contract on my listing. I know this buyer's agent. I trust this buyer's agent. Their house, she showed me her client's house that was going up in the Heights. It's super cute, very, very reasonably priced. And I told my clients, like, I would take it. Like, I think it gives them 60 days. Like, I think that's plenty of time for where they're priced, where the location is. She had 2 showings in 45 days and they had to terminate because I was like, they're not going to be able to close on my listing. And that, I haven't seen that until this year. Like you said, contingencies are normally normal, but like, I trust the process of the other side getting sold.
I would say contingency were normal, like, let's say 15 years ago.
Right. But even when I started, contingencies like flowed. Like, there wasn't this fear of us getting bottlenecked again.
Yeah. But like, nobody was taking contingencies for probably like the last 5 to 10 years.
During COVID times.
Especially COVID times. But I mean, even before that, but it was really hard to do. And there's so much money, especially with the appreciation that people have experienced owning a home, which is so fortunate that there is mortgages, right? So that they can take advantage of home ownership and invest and have rates of return, but they have a lot of money tied into their properties and they don't necessarily have a lot of liquidity, because if they have money tied in 401k, they have money tied in stocks because the stock market's doing good, but they're not going to sell that stock because they're not going to pay taxes on that. And all their money is tied into their house. You've got to get creative on DTI or having 100% financing or accessing a HELOC loan before your house actually is on the market. Because once it's on the market in the state of Texas, you cannot get a home equity line of credit.
Okay. So I guess that kind of, well, maybe I'm making this up, but you're answering my question of, it sounds like people normally have a certain amount of liquid cash saved. And are you seeing that depleted right now because of the economy that we're in? Because that's what I'm hearing from my clients. Like when we're getting ready, I'm going through the steps, and the first thing people are being honest with me about is they're like, we're going to need I'm getting a lot of either we're downsizing because we just can't afford this mortgage anymore with taxes and all the things. But I am hearing normally we would have a lot more cash on hand, and right now we don't.
I think that if I'm really thinking about my transactions for the last year, I would say most people's reserves are coming from us evaluating their 401k, which they're not going to touch.
No,
and that's like an emergency fund.
Right.
That's an emergency fund. So a lot of people have bought properties with maybe less money down than what they were originally thinking. And then once their home sells, then they're taking those proceeds and putting them to the mortgage. And what we allow them to do is recast it. So that's re-amortize the loan over the remaining period so that they can get their payment in a more manageable place.
Okay. Got it. So they're just like buying down the loan, basically.
I mean, it's not a refinance, but yeah, it's like they're basically taking the new principal balance and re-amortizing it over the life of the loan to keep the payment, to get the payments in a more
manageable spot.
Yeah, more manageable spot. I would say desirable or what. Yeah, but yes, like, because I mean, rates have made housing a lot more expensive. So in the past, I would tell people like, oh, don't put all your money to your mortgage.
Right.
Use that money and put it in other investments where it has a better rate of return. But I think that the mindset now is payments and getting them as low as they possibly can to manage their monthly expenses, their household expenses.
Okay. So that leads me to like one of my last questions. So would you say, because one thing when we work with buyers is I sit down with them and I do a buyer's consultation, right? Like I have a pretty little presentation that I go through all the slides. I tell them what to prepare for, what to do, what not to do. What is like the 5 things that you would say that buyers need to do before we go house hunting? And I know you're going to say get pre-approved, but by the time they meet with me, I'm like, you need to get pre-approved. But I want anyone who listens to this, because like, again, we're cool. I want people to know like, okay, start getting ready even before you're ready, because I don't need you coming to me and then we're scrambling after we've looked at stuff or whatever. And I have lots of friends who I see them making lots of money and they're like, oh, we're good. And then I send them over, to you. And it's like, oh no, there's things we need to take care of beforehand.
Sure. So I think a lot of people assume that they're going to be good because they've historically been good. But I mean, one, you don't know what your credit score is, right? So sometimes people they might use like a free credit report thing. And what they don't realize is that there's a regular consumer credit report, and then there's a mortgage credit report, and they are evaluated differently. So you could have what you think is a 760 credit score on a regular credit report, and then a mortgage credit report comes in and it's 700. It's not a bad score, but it impacts your rate.
Right. So what makes that difference?
What your credit card balances are, if you've had any lates, your balance to limit ratio. I would say those are the 2 biggest things, but if you've had lates, especially on installment loans, that's a problem.
Okay.
if you have student loans that you stopped paying on because there was going to be the forgiveness, and now I don't even know what's going on with that. That seems kind of not a thing anymore, but
I have no idea.
I have no idea.
I don't know.
But, you know, now that has to be factored into your ratios. And if there's lates on that and you potentially have collections or judgments on that, that would be a problem for any government loan. So FHA, VA.
Mm-hmm. So are you doing more FHA or conventional?
I'm probably doing more portfolio than anything else.
Okay.
I think that the biggest thing that I would like to see is that there's a real focus on first-time home buyers again.
Okay, yeah, I was going to ask about that. Yes, like what programs do you wish we saw? Because
we do have first-time home buyer programs, and there is stuff that's geared towards low and moderate income. But I think just in general, like from a builder and investor side or developer standpoint,
yeah,
there's not enough building that is for that segment of a population.
Mm-hmm.
So I don't know how somebody who's going to be recently graduated from college is going to be able to buy a house anytime soon or not have family help. So, you know, I think that what's the average sales price in Houston? Is it like $350?
No, it's over 400 now.
Okay. Yeah.
So that's getting
if
pricey.
you have student loans and you have a car payment, and if it's $400,000, you're probably talking about, you know, $4,000 to $5,000 a month mortgage.
I know, and now with insurance being so high, and
I'm factoring that in,
and taxes, like it's gotten ridiculous.
I don't think that you would find. If we're thinking about that, let's just say debt of $7,000. There's no way that someone is probably right out of college making that enough income to buy a house, even if they were going to probably get a gift from a family member for down payment to afford that.
Yeah.
Because if the max DTI is like 45 to 50%.
Yeah, there's no way.
No.
Okay. Well, that helps. People just basically they need to be prepared. They need to have more cash in their accounts. Really, is what it is coming down to.
And I think that everybody wants to have nice things right away.
Right, like the buying of the furniture and the this and the that and all the things. Okay, that makes sense. All right.
And I don't necessarily think that, you know, you're not going to have the same house as your parents, you know.
I work with a lot of people that do, though. Well, it's like a one down. But again, I'm fortunate that I do get to work with a lot of people who do get that help from their parents. But it still shocks me. Full-blown adults, older, in their mid-40s, 50s, are still going to mom and dad and getting help from them. Like, that has been my one biggest learning experience in this industry, is never assume or judge a book by its cover, because you never know where those funds are coming from. So, and I see a lot of it. I see a lot of getting help.
But if you think about it from a certain way, like if there's tax benefits, right? Like if you have a certain amount of money that you can give to your kids or your grandkids that are like tax-free or whatever, and you find ways to give that to them in a way that is not taxed, I guess that's the strategy.
No, it's smart. I mean, it's super smart. Okay. Well, I know we're almost finished. My last question for you. This has been wonderful. What are your goals to finish out Q4 of 2025?
Got it. Okay. So, on a professional level, I think I'll probably close around 50 million this year.
That's incredible. 50 million.
50. Yeah. But
awesome.
You know, and it hasn't been like an amazing busy year. So, and it hasn't felt painful to do that business. I think it's having a really great company that I work for with strong operations that's made it feel pretty manageable. For my kids, getting through the first semester, and that transition of having a high schooler now and getting through volleyball season and soccer and all that fun stuff.
What about personal?
Personal. Well, my husband and I just had our 19th anniversary, and we were like, oh, what are we going to do? And that night consisted of going to a local restaurant after a volleyball game, 2 volleyball games in one day. So maybe before the end of this year, we'll actually go somewhere and have a weekend.
That sounds amazing.
Yeah.
Okay.
So
I love that.
Oh, and I also recently, this is so silly, but I bought a Cricut and I have to learn how to use it.
Oh my gosh. I love your crafts that you've been doing. It's amazing. That's really encouraging. I love that.
It's so dorky.
No, I love it. Okay. Final question. If you could recommend one person to be on here from any realm across the board, agent, whoever, who would you recommend I reach out to?
I mean, I think it's insurance can be interesting. I think interior design obviously is super cool. I love interior design. I think anything economic, right? Like somebody who knows what's going on commercial and business wise.
Those are good. No, those are good suggestions. Cause I always anyone in particular that you would recommend.
Well, I know a few people. I think that I2Tob is excellent. And she lives, in our neighborhood for insurance. Commercial, I'd have to think about that a little bit more. But I think anybody that has some ideas about how business and commercial space and forecasting for Houston specifically.
No, I think I know who I should talk to then, because one of my clients does specifically big commercial deals, and he said it's booming on their side. So I'm I need to hear about this, because he's like, I can't be more busy. And I'm like, oh, great. People are buying buildings apparently.
Yeah. He was saying mid-sized space, light industrial, it's the occupancy of that is or the vacancy is super low, which after COVID, you just thought everywhere was vacant, but I guess it's not. It's not. Okay. And I don't know if it's they're, pivoting a little bit on what the actual spaces are and do, but it's interesting.
Okay. No, that's good. I think that's a good route to go. Well, thank you for being on.
Oh, thank you for making this easy.
Yeah.
She wouldn't give me any questions or anything, which was fine. But then I was like, oh, I hope I don't mess this up.
No, that's it. We're done.
Thanks.